Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, how can I invest in stock market from Delhi? Answer by Tejas. The same way you invest in the stock markets from Kanyakumari. Yes, whether you are in Delhi, Kashmir, Kanyakumari or any other place in India, you have to invest online. The reason I say you have to is because there is no other way to invest in publicly listed companies. You can either do it directly on your broker's mobile app, trading platform by logging into your account, transferring funds and investing, or you can call your broker and do it on the phone. Either way, it happens online. How to get started? Firstly, you'll need to open an account with a stockbroker. Get in touch with any stockbroker you think has the best trading platforms, best services and low brokerage fees. The procedure followed by all brokers is almost the same, so there's nothing to worry about. But make sure you choose an honest broker. Once your account is opened, you can buy and sell anything you want very easily. It's the equivalent of internet banking. Everything happens instantly. How much money you need to invest? Some brokers ask for minimums, but we don't. You can invest any amount you want without any restrictions or limits. Just as you are the driver of your own car, you control your brokerage account and nobody should force you to buy/sell anything. If there is a broker who coerces you, beware. I hope that answers your question. Disclaimer, co-founder and CEO, fires. I have a vested interest in answering this question because we charge the lowest brokerage fees in India and we have in-house trading platforms, but this is by no means a sales pitch or a proposal. Do your research thoroughly before choosing a stockbroker. The best way to find out is to browse other people's reviews. Answer by Praveen Dubey. 10 Golden Rules of Investing in Stock Markets. The bait of enormous cash has constantly tossed speculators into the lap of securities exchanges. Be that as it may, profiting in values isn't simple. It requires gobs of persistence and train, as well as a lot of research and a sound comprehension of the market, among others. Added to this is the way that securities exchange unpredictability over the most recent couple of years has left financial specialists in a mess. They are in a quandary whether to contribute, hold or offer in such a situation. Albeit no beyond any shot recipe has yet been found for achievement in securities exchanges, here are some brilliant principles which could, if took after judiciously, may expand your odds of getting a decent return. 1. Keep away from the crowd mindset. The run-of-the-mill purchaser's choice is generally vigorously affected by the activities of his colleagues, neighbors or relatives. Accordingly, if everyone around is putting resources into a specific stock, the inclination for potential financial specialists is to do likewise. Be that as it may, this methodology will undoubtedly blow back over the long haul. No compelling reason to state that you ought to dependably abstain from having the group mindset on the off chance that you would prefer not to lose your well-deserved cash in securities exchanges. The world's most prominent financial specialist, Warren Buffett, was unquestionably not wrong when he stated, "Be dreadful when others are ravenous, and be covetous when others are frightful." 2. Take educated choice. Legitimate research ought to dependably be embraced before putting resources into stocks. Be that as it may, that is once in a while done. Financial specialists for the most part pass by the name of an organization or the business they have a place with. This is, be that as it may, not the correct method for putting one's cash into money markets. 3. Put resources into business you get it. Never put resources into a stock. Put resources into a business. What's more, put resources into a business you get it. At the end of the prior day putting resources into an organization, you should comprehend what business the organization is in. 4. Try not to endeavor to time the market. One thing that even Warren Buffett doesn't do is to attempt to time money markets, despite the fact that he has an extremely solid view on the value levels fitting to singular offers. A lion's share of speculators, in any case, do the exact inverse, something that budgetary organizers have dependably been cautioning them to maintain a strategic distance from, and along these lines lose their well-deserved cash all the while. In this way, you ought to never endeavor to time the market. Actually, no one has ever done this effectively and reliably finished various business or securities exchange cycles. Getting the tops and bottoms is a myth. It is so till today and will remain so later on. Indeed, in doing as such, a larger number of individuals have lost much more cash than individuals who have profited, says Anil Chopra, a mass CEO and chief, Bajaj Capital. 5. Take after a taut speculation approach. Generally, it has been seen that even extraordinary bull runs have indicated episodes of frenzy minutes. The instability saw in the business sectors has unavoidably profited regardless of the considerable bull runs. In any case, the financial specialists who put in cash methodically, in the correct offers and clutch their speculations quietly have been seen creating extraordinary returns. Henceforth, it is judicious to have tolerance and take after a taut venture approach other than remembering a long-haul wide picture. 6. Try not to give feelings a chance to cloud your judgment. Numerous financial specialists have been losing cash in securities exchanges because of their powerlessness to control feelings, especially dread and eagerness. In a positively trending market, the bait of snappy riches is hard to stand up to. Avarice expands when speculators hear stories of fantastic returns being made in money markets in a brief time frame. This leads them to theorize, purchase offers of obscure organizations or make substantial positions in the fate section without truly understanding the dangers included, says Kapoor. Rather than making riches, these financial specialists in this way consume their fingers severely the minute the opinion in the market turns around. In a bear advertise, then again, financial specialists frenzy and offer their offers at absolute bottom costs. In this manner, dread and voracity are the most exceedingly awful feelings to feel when contributing, and it is better not to be guided by them. 7. Make an expansive portfolio. Expansion of portfolio crosswise over resource classes and instruments is the key factor to procure ideal profits for ventures with least hazard. Level of expansion relies upon every financial specialist's hazard-taking limit. 8. Have sensible desires. There's nothing amiss with seeking after the best from your ventures, yet you could set out toward inconvenience if your money-related objectives depend on doubtful suppositions. For example, loads of stocks have created more than 50 for every penny it returns amid the immense bull keep running of late years. In any case, it doesn't imply that you ought to dependably expect a similar sort of comeback from the securities exchanges. In this way, when Warren Buffett says that gaining more than 12 for each penny in stock is unadulterated blind luckiness and you chuckle at it, you're most likely welcoming inconvenience for yourself. 9. Contribute just your surplus assets. In the event that you need to go out on a limb in an unpredictable market this way, at that point see whether you have surplus assets which you can bear to lose. It isn't important that you will lose cash in the present situation. Your speculations can give you enormous picks up too in the months to come. Be that as it may, nobody can be 100% beyond any doubt. That is the reason you should go for broke. No compelling reason to state that contribute just on the off chance that you are flush with surplus assets. 10. Screen thoroughly. We are living in a worldwide town. Any critical occasion occurring in any piece of the world affects our money-related markets. Consequently, we have to continually screen our portfolio and continue influencing the coveted changes in it. In the event that you can't audit your portfolio because of time imperative or absence of information, at that point you should take the assistance of a decent monetary organizer or somebody who can do that. On the off chance that you can't do that, at that point stock contributing isn't for you. Better put your cash in sheltered or less unsafe instruments, exhorts Kapoor. We give daily intraday equity and commodity tips. For daily one stock free tips, give a missed call on +919 707 112,112 or visit http://www.tradebizindia.com/answer by Badri not Badri. Hi there. Delhi, capital city of India, metropolitan city in North India, seat of Indian government, Red Fort, IIT Delhi, Qutub Minar, India Gate and more. Let's come to the question. First, let's understand the meaning of investment and trading. Investment is something like working smart but not hard. Investing on something like public provident fund, mutual funds, shares, debt etc. to generate profit and create wealth for the futures. Trading is buying and selling the financial instruments for short term to generate profit. Well, how can I invest in the stock market from Delhi? Glad that you are taking a good step for the future. A lot can happen over the internet today. I can say nothing can be done without the internet. People like you and me can't go and buy/sell the shares directly. There are stockbrokers who are member with depository participants, CDSL/NSDL, helps to open trading and demat account. Trading account is used to trade buy/sell the shares or financial products. Demat account is used to hold/store the shares in electronic form which you bought. Depository participants CDSL/NSDL will maintain your demat account. They act as like vault for your shares. There are two kinds of brokers: full service broker, discount broker / online brokers. In short, discount brokers charges is less compared to full service brokers. Since you are in Delhi, you can choose online brokers / discount brokers. Online stock brokers will assist you through online. Before investing, you have to open trading and demat account. I would suggest you my stockbroker Trade Genie, online broker, who assists you at each step. They will assist you from opening account to trading or investing. Free demo. Professional customer support team is rated beast among the stockbroker with minimum time. Lowest brokerage. Excellent back office software. Advanced trading platform. Hope the given answer will help you. By Badrinath. Best stockbroker for stock market trading at low brokerage. Trade Genie.